So as you can see, I'm not in my normal digs. We are in Zurich. We came here for the Point Zero Tech and Financial Conference, and they had some side events that were really exciting, but it allowed me the opportunity to meet Rob again in person, to be able to do a Shark Bites here, not live, but at least in person. So welcome back. I'm Brandon, the HBAR Bull, once again bringing you everything going on in the Hedera ecosystem. But as always, none of this is financial advice. Use it for entertainment or educational purposes only. So Rob, it's great to see you again.
You too, Brandon. Great to see you too.
And I just want to, this has been an amazing week with the side events, with Point Zero as well. We had Hedera Day just yesterday. Yep. What are your impressions?
Oh, it's a great week. I mean, I've worked in Zurich for a year for a large bank here, and it's always, it's just such a beautiful country, beautiful city. Point Zero Forum has been running for years. It's where the regulators, where the decision makers, where the banks and politicians come to discuss matters of import. It's not just a crypto event, and it's certainly not a DGen event. It's quite the opposite. But it's it's very important discussions, in particular by decision makers. So you just get the impression that the debates are being had by informed strategists at governmental level, at Reserve Bank level, at CEO level, and decisions are being informed by that. So it was great. I mean, it wasn't there were thousands of people there, but there was kind of enough to actually have a really good debate. There were 3 or 4 work streams running, plus the main hall all day long. Unsurprisingly, there was a blend of discussion topics, not just blockchain. There's still a lot of blockchain. AI obviously came up a lot. But the Bank of International Settlements was there talking about central bank infrastructure. There were central banks there talking about what they were doing. There were a lot of thought leaders there kind of discussing matters of import. So it was a really good place. It was sponsored by Swift. Got a chance to catch up with some of the people I know pretty well, and in person bumped into Duncan Moyer, bumped into Monique Moreau, and Kamal from THA was sponsoring a lot of this, and some of the side events that you talked about were great. There was an investor side event that we went to, talking to venture investors for Hedera projects. We had a side event on Monday, which was great as well. Which I got the opportunity to talk at with Kamal, and then, as you say, the Hedera Day yesterday, which I think you got quite a lot of content from. So,
I do. I'm going to certainly show some things from yesterday in today's show, but we might as well get into some of these questions. Actually, before we get into some of the questions, you mentioned talking to somebody from Swift. Certainly good. Are there any other entities, big entities? Of course, you can't necessarily say what the details of those conversations were, but are there any other big entities that showed interest in Hedera?
I think everyone that you talk to, firstly, is technology agnostic. At Point Zero, they're not about the technology. Although there were technologists there were other layer ones there. It was heavily sponsored by a couple of the layer ones, so there was a bit of a presence there. But it wasn't about the technology. It was mostly about what to do with it and how strategically it could be used. A lot of talk of stablecoins. I mean, stablecoins as the killer app, as we it's almost cliched now, which lightens my heart because I've been saying it for a long time. But a lot of talk about digital money, that blend of central bank digital currency, deposit tokens, more exotic things like tokenized money market funds, and the range of definitions of stablecoins and how those might be interoperable, and the different mechanisms for doing that. That's what I was talking to Swift about, and we seem to be pretty aligned. That's always good.
That is good. And I mean, Hedera is perfect for a lot of those use cases.
100%, yeah. And obviously, whenever I talk, I always kind of pitch Hedera. And it's always good to have new audiences to listen to the same old stuff that I trot out. But getting really good responses to most of the people that I've spoken to. I've got a meeting with the Swiss central bank coming up from an introduction. In fact, lots and lots of introductions. So I'll be busy following them up when I get home next week.
Well, we could talk about this week ad nauseum,
sure.
no question about it. There's a lot of very good things that were going on, but I want to keep the tradition of regular Shark Bites going, and we're going to answer some of the community questions. So KJW asks, what is the significance of having USDC on the Hedera network? Why does it matter?
It really, really matters. I mean, the fact that we have had so little USDC liquidity on Hedera up until recently has really hampered, the growth of the network, in my view. Consider it like lifeblood. HBAR is our lifeblood. Obviously, it kind of creates the energy, the interconnectivity between projects. It's the it's the lowest common denominator across the entire network. We need HBAR. But USDC is the closest corollary with fiat money by design, right? So having USDC liquid and in volume on Hedera is really important, not only for on-ramps and off-ramps, but also for utilizing the network, with their HTS tokens. So they're super cheap. As you often say, the costs of transferring USDC between the utility that we have on the network, whether it be DeFi or whatever else it's used for, is super important. And the fact that we've gone from, I forget the numbers, 10 million to 110 million or something, 130 million. Someone's buying that USD, turning it into USDC on Hedera and using it. So that's really great to see. It means that we've got this kind of growing pool of liquidity that will then kind of drive a lot of the activity on the network. I mean, I like to see HBAR being used, in fact, more so than most tokens themselves, fungible tokens, as I know you do. But USDC is actually a key enabler of that as well.
So the special traits of Hedera HUSDC, and especially Hedera being an enterprise-focused, business-focused network, even though we do a lot of different things, I can see it having even more of an impact that if you did this on another chain, having that liquidity, having the on-ramps and off-ramps, the infrastructure to support it, I just see it being more useful in general than you might see elsewhere. What are your thoughts on that?
Well, it's certainly cheaper.
Sure.
It's an HTS token. So it's now it's so easy to acquire and cheap to acquire. I would imagine seeing apps actually using USDC within them. Because it's a Hedera-based token, it's you effectively get a micropayment immediately. And so there will be lots of new utility, I suspect, based around that sort of use of the token. And then, of course, we've got DeFi, and with the pairs that you have with USDC tend to be the ones with some of the biggest returns, which kind of now we've got some great lending protocols and DeFi. It's necessary, right? I mean, without it, it's like being dehydrated, right? If as a body you're not drinking enough water, you're feeling sluggish. Your brain doesn't work properly. You don't sleep properly. You're a husk, right? If you're fully hydrated, then you're on peak form, and that's the same with USDC. Liquidity provides that hydration for the network.
Makes perfect sense.
USDC is Hedera hydration. You heard it here now.
There you go. You got our new catchphrase for us. So the next one comes from DLTs with a Hedera rule, I guess that is. So currently Hedera's network revenue isn't sufficient to cover operating costs. Does the governing council have forecast models to estimate when the network will break even and ultimately generate sufficient revenue to further incentivize node operators and stakers?
Yes. I mean, Hedera has a CFO who's very, that's her job, Batsabi. And CoinCom gets these reports every time it meets. Yes, I mean, revenue is low, but so is our pricing, right? So, we have to do more than most networks in order to achieve the revenue. Have we got that pricing right? Maybe, maybe not. We as a governing council can choose to change the price structure. But at the end of the day, it's designed for scale, it's designed for longevity and long-term growth. And we have sufficient runway to keep the network running. It's happening, and it will happen as more and more utility comes. So I don't think it's necessarily a problem. We'd all like to see the network washing its own face, but I'm not. I've concerns about adoption, but not. I don't have concerns about this right now.
Okay, makes sense. So the next one comes from HBAR $10. We get questions from them a lot. It's a name, not a prediction, coming from Rob and I. But he asks, Rob, can spheres replace traditional databases? Why would someone use a private database when in the future they could use a private sphere and have the added bonus of linking to the Hedera mainnet? This was an interesting one because there's certainly going to be applications for databases in the future, but to start on a sphere, just to have that option if you want it, that makes a lot of sense.
There's a lot of assumptions baked into
Sure.
that question. I mean, they're not the same thing. So a sphere is a private instance of Hedera. Hedera, is a distributed ledger technology, primarily for tokenization. Let's say it is. It's obviously for lots of things. So in the Web3 world, in my mind, I see tokens as the kind of the natural evolution of records in databases. So you can imagine, a token, whether it carry value or not, has a set of data attributes, but it's my data attributes, right? And it's not a centralized database table with a record in that someone else can change. So if you think of it like that, then the question of it kind of makes sense. Can the sphere be operated as a database? But it's so much more than that, right?
Sure.
It's not just a database. It's not a data lake. It's not a source of data storage. It provides all those Web3 aspects as well. And it doesn't have to be a sphere. In this regard, we're not differentiating sphere from public network. So in that regard, I would say no, because of course a sphere could have associated databases and database tables in order to support it. But a very interesting way to think about things. And then the other assumption is that the interconnectivity and interoperability between sphere and mainnet, which in itself, and we're exploring this on a few fronts. I don't believe it's absolutely necessary for the two to be interconnected, because that's not the way it could be configured or built, or a particular sphere could be configured and built. But I would imagine most meaningful uses of a sphere would require some form of interoperability with the mainnet to move stablecoins in or out, or as a conduit between spheres. Those sorts of hybrid models are very exciting, I think. Yeah, interesting question, but I don't think a sphere replaces databases in all regards, but could operate as a store of data where that data has property rights associated with it.
A lot of it comes down to the optionality, though, to have that option to be able to tap
as an
into
architect,
the mainnet.
you could cut it in many different ways.
Sure.
Right?
Sure. All right. So this other one also has to do with spheres. It's coming from Tony, so I figured we'd knock these out together. Do you know if they're going to build the Nairobi Securities Exchange on the public network or on a hash sphere? Now, you know me, I've always looked at the marketplaces that have gotten built on DLTs in general, starting with NFTs and then DeFi. Those are proof of concepts for, smaller traditional exchanges. We've had them on Hedera with Verto and Digital Commodities Exchange. And the question is that proof of concept going to then feed off to smaller stock markets and hopefully eventually bigger stock markets as well. And I think this is a great step that the Nairobi Securities Exchange is looking at doing something like this with, I believe it's called the Kenya Digital Exchange or something along those lines. And I know you were interested when I first covered that announcement, but we don't have all the details yet, except for them mentioning that they were looking at Hedera. But I haven't seen the details yet. Have you heard anything yet?
Well, they're still working through the use cases, to be honest. I mean, there are so many. And Frank Whitty, the CEO of NSC, is on UseCom, my network utilization committee, and we do talk about this. There are, as one would expect, a lot of use cases associated with securities exchanges, and so they're still going through discovery and working out where the low-hanging fruit is and where to start. Now, whether it's and each individual use case, there could be a decision about whether it's appropriate to be in a sphere, a private instance of Hedera, or a mainnet. And some will be hybrid models as well. So, now we've got we've got more tools in our toolbox to actually architect systems in different ways that are either privacy preserving or protect commerciality or anything else. So it's kind of a long-winded answer, which could be very short, which is I don't know, obviously, and I probably wouldn't be able to say if I did know. But I mean, generally, if you look at a securities exchange, the holy grail or the core use case is around the tokenization of securities and the trading of securities on that exchange. So that's probably the direction of travel. There's probably some steps or some smaller use cases, less impactful use cases along the way. I don't know. There's probably some digital identity in there as well because it'll be regulated and regulated exchange. There may be a case for a sphere. The way that I believe we're tackling the business development for hash spheres is mainnet first. So all use cases, all enterprise use cases will be looked at from a mainnet perspective. And if there is a case to bring it back into a private sphere, then that will be considered at that point, not the other way around. So we want to be as principled and pure about mainnet and public networks, public permission networks first, and then we have the option. Like you said earlier, it's optionality in the architecture for maybe creating a hash sphere for instances where privacy is absolutely necessary, and that might be the case for the issuing of securities, but that would require, I guess, some kind of hosted wallet for all the customers. It would you'd be inside the perimeter fence. Then you'd need settlement and settlement coordination type activity that may probably be part of the mainnet because you'd be acquiring the digital assets with digital money, so stable coins again, or some such thing, which would almost certainly exist on a public network. So there's all of these bridges or interoperability mechanisms that need to be implemented, and each will be done on a case-by-case basis. We've got things like Layer 0 and Axelar forming now for bridges. I know that's being looked at for HashSphere as well as mainnet and mainnet to other Layer 1s. So there's a lot of ecosystem integration going on. And as a wannabe architect, I'm quite excited by it.
Well, when you think about asset tokenization, securities asset tokenization, it is going to be critical to have that interoperability, right?
For sure.
Out of all the use cases that might even use a sphere, to have that connection to the Hedera mainnet, it seems like that's a natural, at least, progression.
In the history of technology, when you build a walled garden, everything inside it withers and dies. I mean, literally, because we saw it with intranets, we saw it with private permissioned blockchains, we saw it with mobile payment networks, text messaging.
Sure.
If you don't build the bridges, you don't scale the overall ecosystem. So interoperability is really important. In fact, it's a word that came up time and time again, going back to the point zero forum,
Sure.
interoperability. And you even had these top level reserve and central bankers using phrases like, there won't be one chain to rule them all. So I love a good Tolkien reference, but that's become part of the normal kind of almost instinctive reaction to technology. No one's expecting there to be a single chain of choice for any of these things. It'll be horses for courses, and the best ones will come through. And we know that we've got one of the best chains for enterprise and for government type use cases. So the use of HashSphere alongside mainnet, backed by higher open source, is the perfect triumvirate of technology.
One of the things that I noticed this week is that I've kind of become a little unplugged from the Hedera space because you're so focused on the events that you have going on at the conference. But I know you mentioned this morning that some big news came out of Neuron, so that was exciting. Is there anything else, either from the conference and some of these side events, or from some of the Hedera news floating around out there that you'd like to talk about?
Well, I met Marcel, one of the founders of Earthlings, and he was way taller than I expected.
He was. That
super tall.
Got to be 6'4", right?
At least.
He's a big guy. That's one thing that's funny about these conferences. You don't get the full picture when you're doing everything virtually, right?
For sure. The Hedera day that THA put on yesterday was really well attended. It was a side event, an evening event, and still had 120 people
easily
here. Same at the Catch event on Monday. There was a big hall with maybe a couple of hundred people in there as a side event. Just really, really good turnout. What else did I like? Hanya Othman is here. She was talking about sustainability, my favorite project, in a amazingly compelling way. We had a lot of interest in those use cases. I don't know. It's just another great week in Hedera.
All these in-person events are fantastic. I actually do have another question here, but it's not going to go to you. So Jamal Edwards asked if we could have SealSQ on for an update. And just yesterday we had Jonathan, who's running the SealCoin project. He presented all of that stuff. So instead of having Rob answer it, we might as well go to the man who knows about it the most. But before we get to that, Rob, I just want to say thank you. It was great to see you again in person, and we need to do more of these in-person Shark Bites.
Let's do it more often. It's always good to meet up in person.
Before we dive in, we kind of take for granted most of the time digital integrity. And we believe that unless you can fully secure the data behind it, does it really hold any value at all? So this is what we're going to try to address with one very important issue that we see, which is securing the source of truth. SealCoin is part of a cybersecurity group that does many things, among which we design microprocessors, microchips that are inside our devices. We produce identities for governments, but also for objects, and we launch satellites. SealCoin converges most of these assets and plugs it to Hedera ecosystem. But why does it make sense? Because most of the time, you get the physical integrity, which is very siloed, in a very closed ecosystem, without any transparency, okay, but it's given, which is very secure. On the other side, you have the digital integrity, where everything is clean, but where does this data come from? What we're trying to achieve here is to make this bridge, closing the trust gap, making sure that this physical integrity from the devices can actually sign their own transaction on chain directly. Okay? And because they are physically secure, no one can challenge the data. And then we can use the traditional digital integrity that we know to make sure that we can follow the transactions and start eventually monetizing data that holds value. The way we do that is that in our microchips, see it as a physical vault where you can control your public-private keys that we're very familiar with DLT. It's the same for physical objects. And What we do is that we take those hardware-backed device ID, we pair it with some cryptographic validation IoT, what we call certificate, which is the identity of the object, which is securely embedded at the heart of the object. And with that, we create a data flow that will make sure that the device will sign the transaction on-chain directly. That's a big issue to solve, but that does not create a solution. Our solution is to take all of our devices and make them transactional. Okay? This is what we call the transactional IoT landscape. Our IoT are already connected. They communicate to each other. What we're injecting at the heart of the device is a payment mechanism that's going to make them fully autonomous and receive the DVP that we've heard for too many times today, delivery versus payment. Okay? Whether it's a service, whether it's data, whether it's anything you may want to distribute around the device, you're going to be able to do that downloading this Silicon agent that will manage the transactions behind the devices. We're live, actually. So we've been building that for the past year and a half together with THA and THG because they're helping us in taking all these assets from Hedera and making it a live product. So we're not talking about the future, we're talking about a reality where we enable people to generate their own identity. So right now we're using one identity that we know of from our group, but tomorrow you're going to be able to plug with a DID or with other different recognized identity. You're going to be able to connect with a wallet, Hashpack, Blade. Those are lives already. And obviously, those are non-custodial wallets. And once you've done so, you're going to be able to securely onboard your devices into this platform. The process, again, leverages from a secure device registration that rely on the secure element of the microchips of the device. What works with those microchips can also work with an eSIM that has a trust zone environment to protect your private key and making sure that your device has this integrity, this physical integrity. Once you register your device, we're going to issue a certificate of authenticity for this device. By the way, it's going to be mandatory in the IoT ecosystem for each of our devices to get this identity that they need to have. It's kind of the websites that we use. Nowadays, no one uses HTTP without the secure mechanism that they have, which is a certificate of authenticity. It's going to be exactly the same for our objects. And that's create a very secure flow to onboard devices and to get all these devices into a unified environment. But we're not just registering those devices for the fun of it. We're registering them to organize them into marketplaces where any of these devices is going to be able, of course, to communicate with any other devices in the ecosystem, but also to start transacting. And we're going to see in a minute the type of use cases that we can think of and we can bring to the Hedera environment. It's backed by our own token. So we created a POC a year and a half ago, a technical one to prove that it works. So we can connect two devices together, they can communicate together and exchange data for value with using a cryptocurrency to do that. Okay, it works. Based on that, we wrote a white paper, we sent it to FINMA, which is the local regulator here in Switzerland, equivalent to the SEC. Because we have one of our entities listed on the NASDAQ, we had a lot of issue with the SEC back in those days. Now it's much more easier to speak with them, obviously. But anyway, we're located in Switzerland, so we use FINMA as our main regulator. And our token that we have designed holds two functions. It's a utility function and a payment feature. The utility that you get is to enable all these devices to be able to transact autonomously, but hold also a digital access key to the platform and this mean of payment, the component of payment to settle the transactions. What we release early this year, and we received the confirmation 2 weeks ago from the FINMA again. It's an addendum to our initial white paper, where we're creating the possibility to have a proof of security pools organized into the ecosystem, enabling large corporates to start organizing their devices into private networks if they want to, but also to delegate the responsibility of purchasing all this security to bigger players. And of course, when you do so, you get access to a whole ton of services and access to the platform, and they get rewarded for that. What are the market potentials? We're going to see very briefly 3 use cases. The energy use case. Everyone will jump into the trading of energy, but there are so many regulatory hurdles that we cannot cross yet that we will go with by step. Okay? And the first steps are our consumption data and batteries. There's a new regulatory, for example, directive that was issued on our electric cars. Of course, the use case is that your solar panel that you have on your roof will generate energy. You may consume 80% of it, and the 20% remaining, what do? You sell it back to the energy provider. And sometimes, and this is what we saw last summer in France, at negative prices. It costs you money to generate energy. Here, you could actually sell it to your neighbor for a premium price. They would get a nice discount, and the car will purchase the energy straight to my solar panel because they can do so. But so many issues behind that. One very good use case is the battery. The battery holds more than 1/3 of the value of the whole car. And now it's going to be mandatory for our car's battery to have kind of the black box system that we see in the aviation for the planes. With that, we're going to enable these cars to much better monitor the data of their battery and start, before monetizing this data, to be able to transparently distribute this information and have a much better value behind it. And then, of course, the consumption. We actually provide in the UK most of the smart meters in the country. We're talking about 40 million microchip devices. The energy providers, leveraging on those smart meters, have a very good overview of your consumption at the smart meter level, at the door of your house. What we suggest is that we could give them an understanding of your energy consumption at a device level, which is much better. And when you think of larger enterprises, the device level is much bigger and much more complex than just the smart meter level. And those are the first use cases that we want to push, making sure that inside the smart meters, inside the batteries, but also on your solar panel, on your electric vehicle, you can inject the technology, making sure that it becomes autonomous to transact information or energy. The second use case is about the data, of course. We want to enable all of these objects to securely transact their data, making sure that no one else will have access to it, and we can provide the privacy environment which is required for that. The ultimate goal is to become an oracle of data, enabling a lot of smart contracts to be triggered by this data. And the last use case I wanted to mention is device as a service. Today, we have a lot of those manufacturers producing those devices that are stopping to sell those devices because it's a one-shot that you get with a client, and then you need to go back to the same client and sell them again another device, updated device, a better device, whatever. We see a lot of these manufacturers that are stopping to sell those devices and starting to sell recurring revenues in giving you the device, and you just pay for the service that you're using. And this is what, again, and I think Rob was mentioning that earlier, what we enable behind the micropayment services that we can afford. All of these are use cases that we can enable with the technology that we have inside the devices and the decentralized platform that we've created, being able to monetize those marketplaces where data and services can be monetized. And this is our journey, where we started a year and a half ago, and now we're building and working on the release of the platform. So the platform was announced in Davos The MVP of the platform was announced in Davos earlier this year. It's up and running, and now to go to production, which is ready now, we will issue the token by the summer, making sure that we can meet with our also community and bringing a much bigger audience around us.
All right, though I've had plenty to keep me busy this week in Switzerland, there are two pieces of news that I definitely wanted to cover. Number one is the rebrand of the HBAR Foundation to the Hedera Foundation, and the other is the rebrand of the Hedera Governing Council to just the Hedera Council. The new Hedera Foundation posted a thread explaining new name, new leadership, and a new era for builders on Hedera. This year and beyond, we're laser focused on driving growth across Hedera's on-chain economy and its institutional ecosystem, working to place the network in pole position for years to come. So what does this mean? More grassroots builder support, while also attracting top innovators from outside the ecosystem to establish Hedera as a leading network for both startups and enterprises alike. That's DeFi, AI, institutional asset tokenization, and beyond. Alongside directly accelerating builders, we're also going to be indirectly accelerating them through renewed marketing that aims to capture attention across Web 2 and Web 3 and funnel it into emerging economies being built here on Hedera. According to the press release, Charles Atkins will bring a bold new vision to the Hedera Foundation. With prior experience as president of the Hedera Council and leadership roles at Polygon Labs and Aptos, Charles is uniquely positioned to guide the foundation into this next chapter. Moving on to the council, there are a couple leadership changes that go along with the rebrand. First, Tom Sylvester, the former general counsel, will be taking over as president. And we also have Mance Harmon, the co-founder of Hedera and Hashgraph, taking over as the chair of the council. And let's not forget that the concept of the council was Mance's brainchild in the first place. Mance plans to steer high-level strategic alignment, empowering council members to actively build solutions on the network and supporting the council's stewardship of the next phase of the Hedera network. And of course, I'm planning on getting Mance on for an interview as soon as possible to get some more of his insights. One of the reasons for the rebrand was to align both of these entities behind the Hedera brand. From the beginning, there has been confusion between HBAR, the currency, Hashgraph, the algorithm, and Hedera, the network. As you can see from the respective logos, the branding is now very similar. A rebrand was one of the things that I suggested during the peak frustration experienced last year, but the name and logo changes are just the beginning. Any rebrand needs to have real substance and action, and that's the part I'm really excited about and looking forward to. Now I'm speculating here, but what I'm expecting are new exciting council member, use case, infrastructure, and incentive announcements. It definitely should be an exciting summer for the Hedera space. Next, we're going to jump into DePIN, or Decentralized Physical Infrastructure. We have council members working in this space, including EDF and Google, but the two applications that have gotten the most attention are SealSQ, which we already covered today, and Neuron. Neuron's initially working in the aviation and drone industry, but they're not going to stop there. Neuron just announced a major development to Anthropic AI's MCP, enabling AI agents to discover, access, and pay for premium data using USDC on Hedera. What we're watching here is an agent buying Skynet and Roam network data and responding in real time. According to Neuron, API keys are dead. Wallets are the new interface accessing premium data for manual subscriptions, contracts, and API keys. Neuron replaces all of this. AI agents now use a digital wallet to interact directly with data providers, opening the $3.5 trillion premium data economy. This unlocks new possibilities for AI agents that we never had before. Premium data is now universally accessible, giving AI real-time, accurate insights for smarter decisions. And the best part, this is happening as we speak. Duncan Moyer, Hedera board member, who is squarely in the financial sector, said on Hedera Day that DePIN is the space in DLT that he's most excited about. And I agree, this is one of the spaces that has the most potential, and Hedera is extremely well positioned to take pole position. Moving on, I'm going to hold off on network analysis, but the crypto market had a banner week. Actually, it drifted down over last weekend and the early part of this week until the US and UK announced a trade deal. The deal on its own doesn't have a huge impact, and risk assets, including crypto, have more than made up for the losses since. At the time of recording, Bitcoin is up 5.5% on the week and over 3% over the past 24 hours to just under $103,000. Nearly all of HBAR's gains for the week happened in the last 24 hours. It's up 6% on the day and about the same on the week to just under 20 cents. Now, we did break over 20 cents, but as I thought, that's going to be a key area. We're still sitting comfortably in the teens on the CoinMarketCap list, currently at number 16. As mentioned, 20 cents is going to be a key area, and if we can hold decisively above that level, it'll flip to support. If we take another dip, we're going to see support again between 17 and 18 cents. Looking up, if we can decisively hold above 20 cents, my next target would be 28 cents. As we look forward to next week, I'll be back in the US. I have more content from this week to put out, and I'm also going to be doing an interview with Fraunhofer again, but this is a different division than the one I did before on green hydrogen. And way overdue, I have an interview set up with Saucer Swap as well. Rob and I will be back at it, so if you have any questions for him on the HBAR economy or the Hedera ecosystem, drop them down below. That's all we have. We'll see you next week.